If you've been watching my videos, then you probably heard me talk about the commingling of personal and business funds. But what about the intermingling of assets? Long story short, it's never good to commingle business and personal funds. Well, it's similar with intermingling of personal assets when they're used by the corporation and vice versa. If corporate assets are used for personal purposes, the IRS can reclassify expenses reported on the corporate tax return as expenses are attributable to the shareholder rather than the corporation. On the other hand, if a corporation uses personal assets owned by the shareholder, this could indicate lack of separation of the shareholder and the corporation, opening up the possibility of having the corporate veil pierced. You know I love my court cases. So here's one to illustrate what I'm talking about. The taxpayer was engaged in several business activities, including real estate, entertainment services, and interior design. She incorporated her business in New York, where I live, with the name Real Services, Inc. What a cool name, very unique. The taxpayer's books were not well kept, and she frequently used corporate checking account intermingle funds. Well, that's why I told you never do that, right? Business deposits were made into the account, but the checks were written for items such as birthday presents, tuition costs for a friend of a daughter of a friend, and contact lenses for a friend. The taxpayer was audited by the IRS and taxes were assessed on unreported income. The taxpayer argued that she was not individually liable for the taxes. Instead, her corporation, Real Services, should be liable because the corporation received the funds in question. Well, the corporation didn't spend the funds. Well, the corporation spent the funds, but not on business expenses. So that's the problem. Court decision determined the corporation was a sham and stated the corporation had the characteristics of an alter ego. And they went on to say the intermingling of corporate and personal funds under capitalization of the corporation failed to observe corporate formalities such as maintenance of separate books and records. That's key, guys. You got to maintain your books and records separately. Failure to pay dividends, insolvency at the time of transaction, siphoning off of funds by the dominant shareholder, and the inactivity of other officers and directors. That's just not good. That didn't bode well for her. To sum it up, never commingle business assets or income and expenses with your person. That could cause you a world of hurt. If you love what I just said, then I'd like you to like, share, and subscribe so other people could get the message. And thanks for listening and watching, and have a great day. My name is Wayne Scully, owner of W. Scully CPPC, and I'm a tax and business strategist. Our focus is to provide solutions to landlords, flippers, and real estate pros in the New York tri-state area. My firm offers tax compliance, business consulting, and high-value tax planning strategies to save thousands of dollars. At W. Scully CPPC, we say taxing is their job, saving is ours, or we'll give you $100. One last thing before I go, folks. I'm hosting a webinar titled How to Protect Yourself from the IRS and Resolve Your Tax Debts. You can get free tickets for this event, which will be held on the 1st of every month for the next 6 months, starting last month, February 1st, or this month rather, or at the beginning of the month. But there are tickets on sale for March, April, May, June, July. So grab your tickets. You can click on the URL inside this video description of this video or search eventbrite.com. Okay, guys, have a great rest of your day, and I'll talk to you soon. Bye.